Who bought $1.6 billion in Bitcoin Wednesday, and why? It's an eerie coincidence that a trade of this size happened on exchanges with ties to Chinese customers during a week beset by that country's capital market woes, like a toddler in a car seat on a long drive. Last week, the cryptocurrency market persistently asked the gnawing and annoying question, why? Specifically, why did someone make a massive purchase of $1.6 billion worth of Bitcoin on Wednesday in a couple of minutes? You're reading Crypto Long and Short, our weekly newsletter featuring insights, news, and analysis for the professional investor. While many see this huge buy as a signal of bullishness, there may be more complex answers when one zooms out and looks at the overall picture, one that involves capital markets beyond the relatively small world of crypto. Some of the clues about why and who may be found in what, where, when, and how this enormous Bitcoin trade happened. What? As CoinDesk's Miao Shen reported Wednesday, a buyer or a group of buyers entered an order on a centralized exchange to buy $1.6 billion worth of Bitcoin. That's not nothing. To put it in perspective, that's roughly 4.5% of the average daily volume in the Bitcoin spot market over the past 2 months. That much supply hitting the market in under 5 minutes is a lot to jam into any one exchange or 3. It almost immediately sent Bitcoin prices skyrocketing 5% to roughly $55,500. A buyer with a long-term perspective would be more careful if the goal was to get in at the best possible price to mitigate the risk of that rascal known as slippage. Slippage is more than what happens when a bartender fills your glass to the brim and you walk it over to your table while George Thorogood is blaring in the background. It's the difference between the execution price and the midpoint between the bid and ask price that got you to take on the trade in the first place. With a big buy, filling every offer eventually pushes the transaction price, and thus the average execution price higher and higher. But do it in dribs and drabs and you give new sellers time to place orders that can be filled slowly but at a potentially lower price than if it were to be done all at once. Where? Trying to pin down the exchange that took on this trade offers some hints about the buyer's motivation. The price of Bitcoin on Coinbase relative to other exchanges rose sharply as the trade was underway, leading some to speculate that the regulated U.S. exchange was the platform where the transaction happened. However, a little more digging into the data places the trade in Asia. 3 exchanges saw particularly large volumes in their perpetual futures contracts, according to Qiyang Zhu, CEO of data provider CryptoQuant. Those 3, Binance, Huobi, and Bybit, while not technically based in China, have long had ties to the country, where yet another crackdown on crypto was recently announced. It's an eerie coincidence a trade of this magnitude happened on exchanges with ties to Chinese customers in the middle of a week beset by capital market woes in that country. 2 days before the transaction took place, Fantasia, a real estate developer based in China, missed a bond payment of $206 million that led to the company getting downgraded by ratings agency Fitch. The situation isn't just limited to one company, as Standard & Poor's downgraded fellow Chinese developer Sinic. Of course, the two pale in comparison to Evergrande, the over-leveraged real estate behemoth that has been teetering on default. Shares of Evergrande were halted from trading Monday as well. Another large real estate developer, Chinese Estates Holdings, decided to go private Thursday after the market slammed its stock by more than 40%. Chinese Estate Holdings is a major investor in Evergrande. This is a roundabout way of saying there's some serious contagion going on in the Chinese real estate market. That's not good for the country's economy, given that roughly 1/3 of its economic activity is related to the real estate sector, whereas it's only 1/6 or so for the US.